Well, to help us dig more into what lifting this travel ban means for China, I'm joined now by Shehzad Qazi, who's the managing director of China Beige book, one of the leading publications about economic and business trends in China. It's super to have you with us. We've been discussing the human impact of this lockdown and why it is people are, you can see the relief in people's faces and the excitement about getting to see family members, friends once again. These lockdowns and subsequent reopenings have led to huge fluctuations in the market. So let's look at this then through the prism of business and finance. You've been studying these trends. Just talk us through what you have found up until this point, and then I want to talk about where China is headed.
Sure. If you look at China Beige book data through the course of the final months of 2022, and these data are just days old at this point still, what you find is the economy is in a very, very weak spot. I mean, the numbers were just show an absolute bloodbath. Every sector of the economy is struggling, including these consumption sectors. Properties in the doldrums. The manufacturing sector is doing incredibly poorly. And you're looking at a year-on-year contraction as a result of course, the COVID lockdowns that you got in October and November, and then the reopening, the hasty reopening, which of course led to a flood of cases, an explosion of cases, which again curtailed economic activity. So the economic picture right now at the end of 2022 is not looking very good at all.
So let's talk about getting into 2023. I mean, clearly you say the outlook isn't great at this point, but we are going to see the full reopening. And how will that impact the bottom line, as it were, when we talk about this data?
Yeah, so I think 2023, this year, is absolutely going to be better than last. I think that goes without saying. Now, the problem, I think, presently is that a lot of the demand projections and economic projections are getting a little ahead of themselves. The fact of the matter is that we are yet to go through a second wave of COVID outbreaks in the rural areas over the Spring Festival, which means that there's still more pain ahead in terms of both COVID and COVID-related deaths, as well as the economic impact of all of that, which means that the true impact of the reopening on the bottom lines, that positive effect, will probably not be seen before the second quarter of this year. And that is where you start to see demand really pick back up. I think Chinese consumers will be much more activated at that point. This is not probably going to be a this month and next month story.
I'm fascinated to hear your concern about what may happen, or the likely impact of these COVID cases on rural areas. It's clear what you are alluding to when it comes to the effects of COVID on people's health. How about why these rural areas are so important when it comes to economic activity?
And it's not even just a rural part of the country. It's the quote unquote smaller cities, which tend to be still very important, by the way, for the Chinese manufacturing sector, for the Chinese commodity sector. They also, by the way, happen to be quite important when we think about real estate as a whole. So when we get out of the major cities, which tend to get a disproportionate amount of attention in the economic story of China, when you get out of there, you realize a big chunk, over 1 billion people, still need to be thought about. And they need to be talked about in terms of what that means for demand projections and Chinese consumption. And I think you're going to see probably a slower ramp up in activity out there. I think a lot of the services and retail consumption is going to probably not rebound as quickly in that part of China once you leave the major cities.
So very briefly, when we saw a significant drop in oil prices last week, despite the fact that we knew that we were looking at the full reopening of China's borders today or yesterday, you weren't surprised by that. I mean, the sort of received wisdom would say, China back open, and we have seen we've seen a push up on the oil price today. But received wisdom should say, The oil price should be on a roll now. The biggest consumer is back in business. That doesn't surprise you.
It does not. And I think it's because traders are probably saying, look, that boom in travel is probably not going to be as big as we first thought. Lots of hindrances still in getting that travel sector reactivated again. And the fact is, China's recovery in 2023 is coming amidst a global recession and slowdown, which means a slowdown for the manufacturing sector, which tends to be a big user of course, energy sources, including naturally oil. So I think some of those concerns have maybe tempered that excessive bullishness we were seeing just days prior otherwise.
It's good to have you, sir. We'll have you back. Thank you.